Hi, Daniel Flores here, and welcome to my channel. Today I'm going to be discussing the U.S. housing market in 2021. It was announced a couple of days ago that pending home sales in the U.S. decreased from 1 year ago, as well as from 1 month ago. Pending dipped by 2.3% compared to August of 2021, and by 8% from 1 year ago. In addition, all major regions in the U.S. reported a reduction of contracts signed from a month ago and from 1 year ago. When you look at this graph from the National Association of Realtors, or the NAR, you can see that pending home sales actively has been all over the place this year. Whereas last year, it was incredibly elevated and steady all the way through the end of the year. In today's housing market update, I'm going to be sharing important details with you on what implications this could have in our housing market. Is our housing market slowing down as we head into 2022? Or is this more of a normal for this time of year? According to Lawrence Yu, who's NAR Chief Economics, contracts transactions slowed a bit in September and are showing signs of calmer home price trends as a housing market is running comfortably ahead of pre-pandemic activity. It's worth noting that there will be less inventory until the end of the year compared to the summer months, which happens nearly every year. Some potential buyers have momentarily paused their home search with intentions to resume in 2022. Let's first talk about housing inventory and what we should expect as we head into the holiday season. Yoon is right that some home buyers do hit the pause button around the same time of the year and pause their home search until next year. But would-be home sellers also decide to put their plans on hold to list their houses for sale, which ultimately reduces home inventory, which of course decreases home sales. This is the total number of houses for sale over the last 12 months, but have a look at September of last year through January. In September of 2020, there were 1.46 million existing houses for sale in the US, and that dipped to 1.03 million by January of 2021. A reduction of housing inventory normally translates to a dip in home sales. Another piece of data I want to show you is from Redfin's website. Love them or not, their website has really good housing stats. Take a look at this graph of pending home sales for 400 plus metro areas. The red line is for 2021, and when you compare that to the gray line of 2019, the movement is very similar for both of those years. Pending home sales increased starting around February before peaking around June. Then pending home sales started to decrease just after in the 2019. That downward trend continued until the end of the year. So it wouldn't be unusual for 2021 to follow the same pattern. Redfin is also reporting that the 4-week moving average of pending home sales as of November 7th this year is at 7% increase from last year's, and a whopping 51% increase from 2019. So in other words, even though sales activity is very similar when you follow the trend of 2019, the sales for this year are still very elevated and abnormal. Let us now turn our attention to mortgage rates. Mortgage interest rates have risen dramatically in recent months. The average 30-year fixed-rate mortgage now stands at 3.2%, up nearly 0.5% from the beginning of August. When we look at mortgage interest rates over the last 5 years, however, a 3.2% raise is still remarkable. It only seems high now because everyone is used to rates below 3%. What's different now, however, is the tremendous rise in property prices. As per the active listings, or the number of houses listed for sale fell 21% from 2020, but down a staggering 40% from 2019. In fact, as of November 7th of this year, there were only 640,000 houses for sale in the 400 plus metro areas that Redfin reports. In 2019, there were nearly 1.1 million houses for sale. In addition, houses are still selling faster than they normally should at this time of year. So for example, 45% of houses that went under contract had an accepted offer within the first 2 weeks of hitting the market, above the 42% rate a year ago and above the 31% rate of 2019. Also, 33% of houses that went under contract had an accepted offer within 1 week, up from 30% during the same time period a year ago and 20% in 2019. But even though the U.S. housing market remains elevated when compared to prior years, it's still showing some signs of normalcy as we're heading into the holiday season. All right, so here's my overall big picture regarding all of these housing stats, because this is a lot of information to uncover. Here's a bit of my opinion. There's a lot of similarities when it comes to 2021 to the prior years. However, a lot of the metrics clearly remain elevated or abnormal when you compare to prior years. I hate to be the bearer of bad news, but if you're looking for a big housing crash, that is not going to happen anytime soon. This is of course because of housing inventory and mortgage interest rates. They are still remaining super low. However, if we see a large increase of housing inventory and of course a large increase in mortgage interest rates next year, that could have a negative impact on our housing market in the form of price. And that was my forecast for the US housing market. So what did you think? Comment below. And if you have any questions or suggestions, feel free to post them here. Also, please hit the like button and subscribe. I'll see you in my next video.